Hi everyone, a very good evening to all of you. Thanks for joining this very special spaces of JST Investments. Today we have with us Mr. Amay Pimpalgaonkar. He is someone who needs no introduction. His tweets and knowledge sessions on IT have been well received by everyone. But let me still talk around him. So he's an IT veteran with over 2 decades of experience in the IT field, both as an investor and who has worked in the field. Amay today joins us from Germany, and I thank him on behalf of JST Investments and our listeners. Before we hand it over to Amay, I will just give it over to Anish, our head of research, who will give us a backdrop about the sector and the recent happenings. With that, over to you, Anish.
Yeah, thank you, AK. And a bigger shout out to Mr. Amaya, who is our guru today. So joining us from Germany to teach us about the intricacies of the IT industry from a business standpoint. So very grateful for your time, Amaya. So before I go on to the part where I will ask questions to Amaya that will help us make sense of this opaque industry, as it is largely B2B. So I will just give you all a brief as to what is exactly happening in the sector and how did the Q3 go. So as you might have observed, the revenue growth has been as strong as ever. For example, L&T Infotech, one of the IT majors, reported the best ever sequential growth since their IPO, which happened 4 or 5 years ago. So the growth in digital transformation deals is the key growth area. What do I mean by that? Basically, each and every company is trying to take all their processes, all their operations to the digital landscape, and basically removing all the pressures inside and all the simplifying the whole processes and making all of them digital. For example, migration to the cloud by companies all across the world, whether be it engineering R&D. So the percentage of revenue coming from these leading edge technologies is continuously growing up for these IT companies. They are gaining a lot of orders in this particular field. The deal pipeline remains robust, and you will see that this will result in growth momentum continuing at least in the next few quarters. There is even a small uptick in realizations, which IT companies are able to bargain for. So price has been stable with an upward bias. Whenever you are going to your client for getting the realizations fixed. So depending on the service, so much higher revisions for services that have lesser competition. And if the IT companies are able to deliver within timelines, that also matters a lot. Another thing observed is that rather than getting mega sized deals, all IT companies are getting numerous small sized deals. So problems which we are facing is employee attrition remains a very big challenge. However, we see that it will normalize over the next few quarters, as what the IT companies are also saying. The companies have started hiring at a rapid pace to put a check on the number of employees leaving. So this sudden demand for talent has led to a huge jump in salaries, which is putting a downward pressure on the margins of most of these IT companies. And this affects the small and mid IT companies much more than the larger companies from a business standpoint. So the world, whether be it engineering R&D. So the percentage of revenue coming from these leading edge technologies is continuously growing up for these IT companies. They are gaining a lot of orders in this particular field. The deal pipeline remains robust, and you will see that this will result in growth momentum continuing at least in the next few quarters. There is even a small uptick in realizations, which IT companies are able to bargain for. So price has been stable with an upward bias. Whenever you are going to your client for getting the realizations fixed. So depending on the service. So much higher revisions for services that have lesser competition. And if the IT companies are able to deliver within timelines, that also matters a lot. Another thing observed is that rather than getting mega sized deals, all IT companies are getting numerous small sized deals. So problems which we are facing is employee attrition remains a very big challenge. However, we see that it will normalize over the next few quarters, as what the IT companies are also saying. The companies have started hiring at a rapid pace to put a check on the number of employees leaving. So this sudden demand for talent has led to a huge jump in salaries, which is putting a downward pressure on the margins of most of these IT companies. And this affects the small and mid IT companies much more than the larger companies, because there's a significant difference in brand perception. You might have observed that TCS gets a brand value of 15 to 20 billion dollars, and that's what is the mind share that TCS has compared to other IT players when it comes to even employees. So for a lot of these companies, the subcontractor percentage as a function of total workforce has increased. Basically, the margins is getting affected from here or there, and it's majorly due to employee attrition. Work from anywhere trend is helping them to get talents from tier 2 and tier 3 cities. So a little bit positive on the whole negative scenario of the employee side. So which has helped a lot of these IT companies in terms of demand and also manage attrition. We have also seen that the people who come from tier 2, tier 3 and who are working from there, they usually have a lower attrition rate. So something positive. Work from office, which was going to resume by the end of Q3, is now taken back by a few months due to Omicron. So it works for IT companies again, as the cost per worker is much cheaper when the worker works from his home. So companies are incentivized to take it for a bit longer. So travel getting back will be another risk for the margins of these IT companies. There could be a hit, as you can observe that most of the IT companies are having all-time high margins. It's normally 3 to 5% higher than pre-COVID times. So that's something that we need to look out for. Balance sheet for all IT companies, as always, remains as strong as ever. They are enriching investors continuously by huge dividends and buybacks. So there's this thing that some of the companies like Wipro and HCL Tech are growing rapidly through acquisitions. However, acquisitions that we see in this particular sector at this point in time are happening at much higher valuations compared to what these companies usually trade at. So 5-6 times sales. So we see a trend that is playing out. So while other companies like TCS and L&T Infotech are of the belief of not doing acquisitions just to grow revenues, but only when there is some capability acquisition which makes sense with the product portfolio they have, or the services portfolio they have. Finally, most of the companies raised their guidance due to a much stronger than expected business environment. This was sort of expected given the strong order wins they have won in the last few quarters. So now the basic understanding of what is happening in the sector is done. And I am super excited to welcome Ameya on stage as I will start the Q&A. Audience, get a cup of coffee and try to absorb the wisdom as it comes. So the questions begin. So starting with Ameya, what do you think about the current quarterly results of the IT industry? Does it increase your conviction given 5 to 10% quarter-on-quarter growth rates? Could you also elaborate if the quality of revenue is good enough? By I mean, are you observing that our Indian IT companies are going up the value chain? Thank you. Mic to you.
Thank you so much. I think you have already described or answered the first question yourself pretty well. So I don't know what exactly value I would add. So before we start the discussion, I'll just say that I'm not really an IT veteran per se, even though I just try to share things from my experience working with different customers, different system integrators, different cultures, and so on. So there could always be somebody who would know more about this domain than I do, right? So please take my remarks with that context. So as Anish very clearly pointed out, all the aspects that are currently adding to margins or currently impacting the margins, what are the positive things, what are the negative things? So there are multiple things contribute to these results, right? So first is, of course, the demand side tailwinds, but also margin expansions are happening due to the effort mix change. That's the key thing because of which the margin expansion is happening. The savings from travel and similar costs basically added to margins, and then work from home further reduced operational expenses, as you correctly pointed out. And if you also see the utilization has gone up, at the same time, the offshoring is going up in tandem, right? So naturally, a lot of companies are reporting good numbers, but what is important here is to see who is reporting these numbers on a right base. So what I mean is a high percentage margin or a high percentage revenue growth on a smaller base can be optically elusive, while a small percentage on a large base can be seen as a poor growth. So we have to keep this in mind. And so I definitely look at these numbers, but more than that, I spend good time listening to con calls and also interacting with the investor relations team, trying to understand stance of the management on certain aspects. I think what led to these numbers in the results matter more than the end output, which mostly everyone sees, right? So a good result can't be judged only through good numbers, is my personal view. If a company takes a strategic decision to close a division, for example, that's eating up margins, or decide to invest in a margin supportive segment, but the numbers are not very exciting in the current result. So I would still see that as a good result, because such strategic decisions is what leads to large windfall gains in the future, right? So if you are too fixated on the current numbers, then we will miss what will come in the future. Having said that, I think Q3 numbers have been a mix. TCS reported pretty good numbers on their scale. Infosys has already upped the guidance. LTI, as you described, has delivered highest constant currency growth. Coforge has also upped the guidance. Persistent and Mindtree results are also very, very good. From a smaller base, I think Birlasoft also reported very good numbers. But results alone don't add to my conviction, to be very honest. How company is positioning or is able to envision the future, how the business dynamics are changing, that also matters a lot. So even if it means price stagnant for a few years, I won't take that as a bad result. That's how I see IT or tech space. So when it comes to adding conviction, looking at a quarter-on-quarter growth rate, I think I kind of anticipated this. So conviction would come from how company is positioning, how company is preparing to gain more pocket share of the existing customers, or more pocket share from the new contracts that would open up in diverse business domains or diverse lines of businesses. That's what excites me, and that's what basically adds to the conviction. And I think your second question was whether our Indian IT companies are going up in the value chain and if the quality of revenue is good enough. So I think absolutely certain companies are definitely going up in the value chain. So if you look at LTI, for example, the quality of revenue has been very good. And so is the case with Persistent or Coforge or even Mustech, which is a small company. So companies are upping from a mere service provider to a technology provider, and they are becoming vendor of choice kind of positions. That happens only with the quality of revenue is improving. And if you actually look at the way our Indian IT companies are structured, you would have to divide these companies into different bands. So naturally, the first band is that of the frontline IT companies, which is TCS, Infosys, Wipro, Tech Mahindra, for example, HCL Tech. So what customers look from these companies, the stability and the accountability. They are okay to experience little delays and little inefficiencies, or I would say lack of innovation. But what they want is the continuity of business continuity. So business continuity is the main reason any customer would primarily go to these big frontline companies, because they have long operational history. In case anything goes bad, there is always somebody who customers can hold accountable, right? When it comes to the mid band, you have companies like LTI, Persistent, Coforge, Mindtree. So the customers goes to these companies because of their innovation capabilities, because these companies bring a very interesting thing on a table, which is called as the time to market. Because these companies are relatively smaller compared to the large companies like TCS, they operate in smaller teams. So it's really possible for the companies of this size to mobilize a team in a shorter span of time, get a project delivered, small projects, too many number of projects. So essentially what that leads to, that your time to market can be shortened, and the customers are ready to pay for that, in this case, companies. Cost arbitrage. So if you look at the Birlasoft, even though they have pretty strong capabilities in the manufacturing segment, but if you compare with a manufacturing capabilities that, for example, Infosys has or HCL Tech has, why would somebody go to Birlasoft unless there is a significant cost arbitrage, right? That's one thing. Second thing, if you look at a Mustech, for example, it's a very specialized company who operates in a very niche or specific pockets. So naturally, they are a vendor of choice when it comes to business in these small pockets, right? So the business won't go to the frontliners, the business will always go to Mustech. So there are these two things on a smaller or the third band, if I try to categorize these companies, right? So if you put this on a form of an industry pyramid, you will notice that the most value accretive contracts are scooped up at tier 1 and tier 2 level, primarily, right? And whenever there is the demand overflow and the plate is actually overflowing, that is when the value accretive contracts or the kind of work starts percolating from tier 1 to tier 2 to tier 3 and tier 4. How many number of tiers you can have, right? So that's how currently the nature of the contract and the demand is. But if you are focused on tier 1 and tier 2 companies, I would say the quality of revenue is definitely going up. And select companies, not all the companies, select companies are definitely upping the value chain. That's my opinion on this.
Yeah, 100% agree, Amaya. We'll go deeper into how those select companies are particularly increasing their revenue a lot better than others. Like, as you mentioned, the stock markets are always forward looking. So we all need to check on what are our companies doing today to take themselves to the next level, even if the current numbers are not the best ever, which you might have observed with some IT companies. And so is your thought process. So my second question is on the same. So given your past history with the IT sector, so what are the key factors that have helped you to judge as to why some companies will do much better than the others? Or just to invert the same, why have some companies struggled to grow even when the Indian IT sector has seen such a huge tailwind in the last 2 decades? Like at this point, we see a lot of IT majors are going for so many acquisitions rather than going the organic route to grow their revenues. So a route which, when done for revenues, doesn't really have good odds with long-term success. So your thoughts on the same, please.
Yeah, absolutely agree. So if you hear the company con calls and when you question, listen to management when they talk about acquisitions, you would hear most of the leaders, they always say that whenever it comes to acquisition, it has to be for either revenue or the capability reasons. And some of the companies primarily focus on the capability reasons. So if you look at, for example, TCS or LTI, in that case, you would see that they did a lot of acquisitions in the cloud space and the data space, data science space, much before COVID hit us. So it was not really for a revenue related reasons, but to add to the existing capabilities, to enhance the existing capabilities, right? So I fully agree with you. The companies who invested way ahead in time in acquisitions to bring the additional capabilities, they are now positioned to make most from this digital transformation revolution. The companies which basically missed out on building these capabilities and suddenly they have kind of a pressing need to have these capabilities out there in the market. So they have to ensure that they don't lose the revenue that is otherwise available, right, in the different pockets or different hyperscaler revenues, for example, that we always talk about. So in that context, these companies, they have a pressing need to make more and more acquisitions. So that's why you would see the Cognizant recently acquired like some 4 or 5 different companies which are primarily operating in the ER&D space. So suddenly they realize that, okay, the ER&D space is hotting up and we have to have capabilities in those domains, right? So that's one thing. And the very straight answer is, to answer what is the key factor that helped to judge why certain companies do better. And the very straight answer to this is positioning, which then leads to the perception of that company as to how market or the customer sees the company. Is the perception of the company of that only a system integrator or ADM, or is it that of a value creator? Is company trying to get in desperately, or is it trying to focus on what it wants from the contract? So of course, in the end, everything boils down to sales. So we know in the end, everything is about money. But the skills plus expertise at scale matter more than the volume. So previously, it was all about volume at scale. So people wanted to deploy more and more people on the project. Customers were really concerned whether do you have enough bench? If suddenly somebody leaves, do you have a fallback plan? What is your bench strength? So I negotiated certain contracts in the past where there was a percentage bench strength expectation was also part of the contract. So I don't know whether that is there anymore or not, since I'm not working the contracting very actively now, so I'm not aware of that. But that used to be the case, right? So clients want to get more productive now. Sustainable solutions that can accommodate the future needs without leading to, basically they can accommodate future needs with least disruption to the steady state operations of the business, right? So that's what exactly matters to customer, who will provide me a business continuity, who will provide me that sustainability, who will provide me, who will reduce my maintenance overhead. So these things have kind of added to the entire equation. And that's why, the companies who have positioned way ahead in the advance to understand these customer experience kind of needs. CX is what we call as a customer experience, right? And then we have another term called as digital transformation, and then we have user experience. So when you sum up the user experience, digital transformation, you have a CX, right? So CX is an umbrella term that wraps everything together. So the companies are able to do or perform better compared to others in the market, or compared to other peers, is purely because of their positioning and purely because they saw that change coming in way ahead in time, right? So if you look, that this need to go digital is not new. It was there since long time, and COVID just gave it a shot in the arm and forced companies to take up all these digital initiatives way ahead of the planned roadmap, right? So if you look at some of the prominent names, Accenture, TCS, LTI, Wipro, they saw this trend in digital and cloud adoption much before, and they had started positioning themselves way before, from 2016 onwards. So, and you would actually see these management speak about the changing business dynamics, the way software is delivered or software is consumed, the way digital is going to be more and more part of the revenue way back 5-6 years ago. And once actually COVID hit, the sudden need to go digital, virtual, connect and collaborate. So that basically brought forward the plans companies made for investment in the space by, let's say, 5 to 7 years at least, right? So this is exactly what has happened. And the companies who were ready to grab that buy, they have been able to grow nominally well over other companies. So if you look at cloud, for example, whoever checks the maximum box on the capability and the skills has been able to grab maximum share of the contracts which are currently available, right? So when it comes to a digital transformation, you have to see it as a journey, right? Digital transformation does not necessarily mean you are bringing certain processes of your business over the cloud. That's not a digital transformation. What digital transformation means is how seamlessly and effortlessly can you reach your customer, and how quickly can you react to their changing needs. That's what is digital transformation doing at a business level. That's what the value proposition is. So that is a journey, and that's a pretty long journey. So when it comes to enabling this journey, the companies need to have capabilities much ahead in time. You can't say that since I am seeing an uptick in the AWS or uptick in, let's say, a private cloud or a hybrid cloud, now I'm investing in the cloud, now I'm investing in getting my partnership sorted out. That's not going to work, because the time to position is already gone in this space. So that is a straightforward answer to your question. The companies who saw what's coming, how the business dynamics is changing, and the companies who were not really adamant on, having another practice. So I'll be very, very open to what Mustech thinks. So in the con call also, they mentioned it that they don't want to have an additional capability in SAP just because they have a partnership with Oracle. I find that a little absurd, to be really honest with you. I mean, it is like you're playing just because Oracle has a lot of influence, or because you have a capability in that. Why can't both practices survive or coexist, right? So there are companies like LTI or Infosys who have both of these capabilities at scale, but both of the capabilities are coexisting. So what's happening in case of Mustech is just to ensure that Oracle doesn't feel bad. They are not scaling up, or they are not investing anything into the SAP or any other enterprise capabilities, which is not the right way forward, because at the end of the day, they are a service provider, right? And they need to ensure that they have association at all the levels. So that's what the point is. So positioning in the changing business dynamic is what has helped all these companies realize more and more revenue and pocket share from the existing customer contracts.
Yeah, makes all the sense. Just like in any business, the managements need to be visionary enough as to offer what your customers will need in the next 5, 7, 10 years. And that's what I think IT all IT investors need to look out for. So to judge better the companies that have specifically positioned while others aren't able to. So Maya, you recently mentioned in a thread, like while every other IT tech company says that it's working on AI, ML, IoT, and digital, all the big words, the key thing is to know who is doing the real value accretive work. Who is doing just vanilla sourcing work in these new areas. So basically judge between who is doing the value accretive and who is doing the vanilla sourcing work, outsourcing work. So could you share some anecdotal experience as to how you were able to differentiate between the two? And is it replicable for investors who do not have the IT domain expertise? So how are companies you own being ahead of the curve in building these capabilities? Thank you.
Yeah. So to answer a very specific part of your question, is it replicable for investors who don't have the IT domain expertise? And then answer would be same. If I ask you, is it possible for non-pharma guy to understand what a company is doing in CDMO or CSN, right?
Got it.
So the context would be the same. The way you answer it, so we will be on a two different end of receiving in that case. So it's definitely possible, right? If you take a structural approach towards a particular segment, it's definitely possible. Without taking names, I will give you a real example. I was working with this IT major long time ago, and I was actually leading a team that was building a product for one of the leading banks, which would basically assess the insurance and banking products related data through a tool. So that was designed for data assessment and data structuring, and then through certain business rules, it could manage the life cycle of that customer's contract. For example, if a customer buys a product, so this tool would see the data related to product, assess the customer profile. We were building that product, and that product eventually went live in some time, and the company gave a presentation to the customer where they described it something like this, that it is an intelligent contract lifecycle manager that assesses the product and customer profiles and completely automates the life cycles. It was fantastic title, and here is what happened next. So the customer was actually sold on the buzzword. He deployed the product at multiple locations for multiple countries, and naturally, when you deploy your solution across the globe, all the countries have a need to have a parallel processing, delegations, and auto processing capabilities, right? So the product had none of these, but it was positioned to be intelligent. So so the expectation was that the product would be able to provide these features very seamlessly. And the reality is the company hired a bunch of college graduates at the lowest salary levels, and they asked them to perform these tasks the moment a request was raised from a specific country. It was kind of a 24/7, 365 days active job. And this is how certain companies manage perception. I'm not saying this is the reality, but such loose pocket of misrepresentation still exists. I still see that very actively throughout my days when I'm interacting with leading system integrators or ADM service providers from India. I think I owe a lot of this understanding to about the IT and the space to my working experience with so many different IT companies. So I've worked with these companies as an employee, worked as a customer to these companies, and these companies were SI vendors to me, and I have managed the SI teams as well. So from tier 1 and tier 2, I think I've worked with at least 8 to 10 companies in different capacities. So I know internal culture very well as to how companies show up at the end to the customer, in front of the customer, and when they say something, what exactly it means in reality. So I have seen how European companies perceive certain IT companies. For example, no matter how amazing work some leading frontline companies are doing in some cutting edge technologies, they always have a loose end kind of a practice in ADM or a low end work in the support area where customers have expressed frustrations of working with this company. Just because there is a cost arbitrage, they are forced to work with these companies. So these kind of loose ends are always there. We can't only look at the loose end and they say Indian companies are only doing a pathetic work, but that's not really the case. It's the entire value chain, and it's like आम की पेटी होती है, राइट? सो जो ऊपर वाला आम होता है वो अच्छा होता है, थोड़ा दबने के बाद गर्मी से वो नीचे वाला थोड़ा खराब होना शुरू हो जाता है. It's like that, right? Not necessarily all the pockets have these kind of a problem, but these loose ends will always be there in all the IT companies. That's always going to be the case, right? And so basically, this experience helped me to assess which IT company had a culture to innovate or strategically handhold the customer, who is ready to take the full ownership, and so on. So then what also helps is, I think, industry connect. So you have to stay updated and you have to keep on speaking with people at different levels. You have to speak with developers, product owners, solution architects or directors or whatever your reach is. You have to ensure that your reach expands if you are studying a certain domain, right? To keep your understanding on the current state very, very active. So this also helps in knowing who is investing in building a good product or who is just trying to capitalize on the name of these buzzwords like AI, ML or IoT or etc. Right? So investors who are not from IT domain, they need to spend time understanding basics of these trends. So for example, if you're reading an article related to AI or an IoT, what exactly is AI or IoT, or what are the pitfalls implementing data lakes if you don't follow the data ethics, right? So one of the major risks that will emerge to the technology company in future is not operationalizing the data and AI ethics. Okay, what I mean is, if you are running a project and you are gathering a certain kind of a data, eventually you will use that data either to build some analytics dashboards, or you will do some modeling and forecasting, or you will use that data to create data lakes, or you will feed that data your algorithm to train it, right? But if that data is not free from the discrimination, the output of your analytics or output of that AI algorithm, whatever you have built, that will always have discrimination inbuilt. So if tomorrow there is an inquiry from a federal government or any government of sorts to assess whether the platform or the solution or AI or whatever you have built is free from a certain kind of a discrimination, and if the federal body finds that no, that's not actually the case, you have actually ignored the data and AI ethics related aspects, that means your reputation get impacted. You get into a lot of lawsuits. You see that happening to Google and Facebook so many times in US, right? So the ethics related processes and assessment is very active in US. That will eventually come to India as well. It's just like US FDA, right? So they keep on issuing the observation letters to see who is doing the quality work and who is messing up. They always do this, right? So why can't we have in the future, because we are moving so much around the data, why can't in the future we will have something similar to US FDA, who is assessing the ethical pitfalls around the AI and IoT, right? So probably I just digressed a little bit. So my point is, investors have to spend little amount of time understanding these terms. So if you're reading an article about IoT and you come across a specific term, what basically it won't be too quick turnaround kind of a thing, right? But one has to spend time learning the basics, listening to the con calls. And whenever you come across a term, let's say you come across a term called as data lake, you don't really understand what data lake is, right? So what you should do is you should take a pause there, right? Whenever you come across a word or a technology you don't understand, just note it down. Pause everything. Pause. You need to stop reading and then start reading about what that particular terms means. Read about it first and then resume reading what you were reading earlier. So if you just note it down thinking I will read it later, you will miss the context of that article entirely, right? So you just don't know what that technology means in the given context. So you should spend time building your understanding about these terms, about this sector, in a same manner anybody would do that for pharma, because Anish, you have such a phenomenal knowledge in pharma, and when I read your threads I think, oh god, I just don't understand anything what he's talking about, but you make things so simplified, so that really helps. So for me, like people like you and people who make the pharma domain a little bit more simpler to understand in layman terms, I always look up to people like you. Further, I think people can always subscribe to some technology consulting newsletters from big consulting companies like McKinsey or Accenture, Deloitte. Go to company websites, download the case studies, read how that company is delivering value to a specific customer from a specific domain. If you do that, you understand which company is strong in what line of business, who is strong in oil and gas, who is positioned well to make most of the renewable, who is doing good work in blockchain. So that eventually, slowly and eventually starts giving you a more holistic perspective over the entire sector. So feedback from the network is very, very important. You need to continuously speak with the network. You need to invest in building your network. So I'll give you a very small example. Back in 2018, I was in touch with a lot of Nordics and EU-based recruiters, and they told me very clearly that Mindtree, LTI, and TCS, specifically these three companies, were hiring very aggressively in that area. So insights like these these also help you to see, who is trying to get into what kind of markets and what kind of contracts, what business would open up, right? So I think that really sums up how one can actually start approaching the IT as a sector. I'm very honest, IT is not a very complex sector to understand, Anish. Probably pharma is even more complex to understand. And any misunderstanding in the pharma can directly mean is on life, right? But in case of IT, ऐसा नहीं है.
Yes. True. So as Warren Buffett rightly says, it takes 20 years to build a reputation and 5 minutes to ruin it. If you think about it, you'll do things differently. So some companies don't, I guess. So such a good discussion on buzzwords, on how much important it is to invest our time with newsletters, industry relationships in building an understanding about the sector. So my next question is on the same topic. Our buzzword is R&D. So when I look at the P&L of a lot of these product companies like Intellect Design, Newgen Software, so one thing that stands out is the consistent R&D that they have to do just to add more features into existing platforms or develop new platforms. So my question is it a consistent need and part of a business's normal operations, as older platforms lose their traction, or just something where management are showcasing their ability of capacity to suffer today for a much brighter future ahead where they could reach the next level, or simply a mix of both? So how would you put it?
So one thing that we have to understand very clearly is India has very, very limited number of pure play SaaS companies. And at the end of the day, every customer demands customization. So we have to keep this thing in mind. So to answer your question, I think it's a consistent need to keep the product relevant in the market. And this is where how you deliver the product makes all the difference, right? So, I think it's not exactly only the need to stay relevant, but it's also to ensure that you deliver right features and right functionalities to the customer when it is required, how it is required. That's also one of the key reasons because of which the R&D expenses are always there for product companies, right? So this is where how you deliver the product makes all the difference. So the companies who use continuous integration or testing and deployment and delivering their solutions in an agile way through new functionalities will always witness sticky customers. And the customer loyalty is greatly dependent on this experience. So that's all these R&D expenses are for, right? So for example, if you have, let's say, a complex product which is delivered over a cloud for a large bank, and it processes global transactions through this. So it's important to ensure that no business discontinuity is required even for a small upgrade or a patching. If you ask a company, point is, if you ask a company for a downtime when operations are spanned across the globe in different time zones, it straightforward means it's a loss of business for them. So how you deliver product makes all the difference, and your customers should not experience consistent downtime for upgrades. And enabling this can be very expensive if a product company adopts these methods midway or transitioning some of the old products to a newer way of delivery. So to ensure that they are listening to their customers' changing needs all the time and ensuring that they continue to ship all these features without customer experiencing any downtime or any disruption in the service, or even the quality of service stays the way it is, that is the primary reason to have the consistent R&D. It could mean to add more features when customer requires to existing platforms, but the point is it's a consistent need, and it's a part of business as usual for product companies. So R&D expenses will always be there. Only thing is, what happens is some of the companies, they always front load the R&D expenses, which exactly happened in case of Intellect Design Arena. They front loaded all the R&D expenses, which basically suppressed the earnings, and people started saying that they are not able to perform. And suddenly when the R&D expenses were off the book and product monetization started, suddenly that operational leverage kicked in and stock went 10x from there, right? So uh, this is very normal in case of product companies, and a common investor's understanding about product companies and how they differ from the traditional IT companies, what was not very great until a few years ago. It started only recently. That's what I have seen. So people would expect a sequential quarter-on-quarter growth from a product company as well, which is not really the case. When it comes to the SaaS and a SaaS opportunity, so if a product is being delivered over a cloud, that's not a SaaS, right? It's just a different delivery model of an existing solution that you have. When it comes to SaaS, there are also again different models of SaaS. So one is product as is. That means the way the product is delivered, you have to consume as is. There is not going to be any customization, absolutely no customization at all. So for example, you use these Jira or Trello kind of systems, or let's say even Twitter, it's a kind of a service, right? So you use it as a software as a service, but there is no scope for customization. But when you have a software which is delivered over a cloud, there is always a possibility of customization. And that can happen through two areas. One is you can do so through public cloud, or you can do so through private cloud. When you are delivering a software through a private cloud, the scope to customize the features to meet customers' need is relatively high. The scope is more. And when you are doing that over a public cloud, you also have to keep in the limitations from the public cloud infrastructure in mind before you can, commit to the customer that we will be able to deliver certain set of customizations or not. So these kind of things we also have to keep in mind. I hope that answers.
Yeah, totally. So product improvements are basically a must in these companies, and R&D is a must, and that too at times could be expensive, like 10+% of sales they have to invest continuously to improve their product. So let's talk about the biggest pivot that we have seen in the IT industry that is playing out currently. So what are your thoughts on TCS going the consulting route, which is very similar to what Accenture already does and has built a good brand around it over the last few decades. So do you see TCS having the culture to have a mark on this space? And additionally, any mid or large cap IT that you know of trying to make a dent in this lucrative business going forward?
Yeah, sure. I think all the three companies, TCS, Infosys, and LTI, they have a lot of potential to unlock additional value from the consulting segments. Not only they have a brand recall value, like you already described, the brand value of TCS. LTI recently reached only $1 billion. It's minuscule in front of TCS. But again, consulting is all about perception and the positioning. So if the general perception of the company is that of a system integrator, no matter how hard it tries, consulting will not lead to any meaningful gains. I think in 2013, Infosys acquired a company called Lodestone back in, I think it was a Swiss-based company, and primarily in the consulting. But that acquisition actually led Infosys nowhere, right? Shibu Lal was so positive about value unlocking through a new business area, consulting. And I also know a few friends who joined in the consulting segment, but they didn't stick around. They moved on to the pure play consulting companies eventually. So consulting is an umbrella term. What nature of consulting you would want to do is the key. So if you are an IT company and trying to get into management consulting, building strategies and roadmap for the customers, etc., then you won't do any good, since it's dominated by likes of McKinsey and Boston Consulting in this space. So if you are focusing on IT consulting, however, that is a space where you can expand significantly. You can go up the value chain from a service provider to a technology partner to a vendor of a choice, where you work closely with the client management. Then you work closely with management consulting companies, and then eventually take active part in determining how to deliver the technology. So if you look at Mustang, for example, the kind of transition it has done from a simple service provider through a kind of a very strategic player for UK government, that is kind of a transitioning that you have to do, and that is a kind of a consulting IT companies need to focus on. You can't say that I will do a generic consulting kind of a work that usually let's say Accenture is kind of doing, because it's a lot about culture than practice. So if you look at the SIs and the ADMs or simply outsourcing work, you have to give a lot of instructions to these things, right? Quite similar to how you would describe to a baby. So these SIs, they often ask for, let's say, a pseudo logic because they don't want to take ownership in case their logic fails. So we have to scale up from this fearful cover my ass kind of a mindset to more of a taking ownership kind of a mindset. So if you start taking ownership, only then clients will take you seriously. And this transition is time consuming. Even if you acquire a consulting company, your perception would still be the same. So I would say consulting is not a practice, but it's more of a culture. How you present, how you talk, how you strive to find value, etc. That is exactly, makes all the difference in my view. So, culture is everything. That's what the point is. Communication is extremely important. Skill at a scale is important. Our Indian talent has the potential. I would be very honest. Our talent has super potential. But the companies who recruit these talents perhaps are too busy focusing on the billing than honing such talents to reach a scale. So achieving a skill or achieving a scale is left to that individual. Of course, it's individual responsibility as well, right? But once a person reaches that skill or a scale, why would that person work for the SI or the IT company, right? That cares only for billing. I mean, billing is important too because you are responsible to the shareholders, but other aspects are also important. So I think the nature of skill needed is also very different in consulting. So only vertical depth of the topic isn't enough. So you need to have a horizontal reach too. For example, let's say in consulting, you are given a responsibility evaluating vendors for a certain need. Then how would you do that is important. You need to know capabilities of all the vendors. And if you have always, let's say, worked only with, if you take the cloud as a paradigm for now, and if you have always worked with vendors who provide on-premise solution, then you won't understand the contract complexities with the SaaS vendors, right? What should be the availability metrics? What should be the downtime metrics? And you need to have a horizontal reach to clearly assess or evaluate each vendor on many aspects, and this comes with experience. So my final remark on this is, I think IT companies should focus on becoming technology consulting partner, which many companies are already doing. TCS is doing, LTI is doing, LTTS is also doing, although it's not an IT company. Mustang is doing in certain way with the UK government. So consistently, companies, if they focus on IT consulting, becoming a technology partner, then this will definitely unlock more value.
100%, Amaya. So consulting is basically a very long-term game. Culture is the key, which won't happen overnight and could lead to significant value migration in the hands of our IT major companies if they play their cards right. So if you have to be really value accretive for your customer and replicate the same multiple times with multiple customers over years to become a brand. So coming on to the long-term trends, recently a top management executive at TCS said this in an interview. Robotic process automation evolution could lead to a risk of them losing 30 to 40% of their revenues in the long term. So do you see this as a structural risk which needs to be followed closely? Or the probability for the IT majors, whether it be TCS or L&T Infotech or Infosys, to pivot with the changing landscape remains high, according to your analysis?
Maybe it would be helpful if you can point me to that article. So I'm not sure who said that, to be really honest with you, and in what context it was said. But if I were to guess, it could mean the revenue loss in doing the edge activities. For example, workflow management or ticketing systems, this kind of mundane work, right? So perhaps the revenue that comes from the support activities where teams are deploying global support systems and getting paid per ticket basis, how many tickets did you solve, how many tickets did you answer, and so on. So I think probably on that aspect, if he's talking about the revenue coming from the kind of support systems, I would probably say, yeah, that could happen. Perhaps that was the context. And if we take that as a reference, then this statement can be true indeed. Because if you see the changes brought by Devops, because Devops is also it's not a tool or a product, right? It's a process, it's a culture, and the continuous deployment and continuous integration, CDCI as we abbreviate it, right, can make a lot low-level jobs redundant. It is not a structural risk in my view, but it is very good for transformation. Not only this will help our employees to learn new skills and stay relevant, but this also helps companies stay relevant. If you talk about skill at a scale, so I want to bring your attention to this point. How our IT industry is transitioning. Earlier, it was all about volume. It was all about how many people you have, what is your bench strength, will you be able to deliver this or not. But now it is not only about that. It's not only volume with scale. It's now skill at scale. And skills come at cost. Skill don't come cheap. With more companies adopting Devops and Agile deliveries, the project team size are shrinking. If a project used to have a team of, let's say, 10 or 12 people previously, now only 2 or 3 people will deliver it. So the boundaries between development and operations are getting thinner day by day. So basically what it means is developers can't blame an operations team for finding too many bugs. An operations team can't blame developers in return. And it's a very typical scenario in a system integrating company. Bahut common, right? So the process from the start is about design, then build, take the feedback, correct, then again build, then again take the feedback, and so on. So for the given delivery, ownership is with everyone alike. So this helps developers to automate certain parts of the pipelines, and there are tools that help you automate the basic functional tests, for example. So developers have much more responsibility in testing what they have built. It's not a responsibility of a testing team or operations team to do that. So, and similarly, operations team has equal responsibility in ensuring that right feedback about customer experience, user experience, and the steady state of that particular product is always provided to the developers so that they know what change they are doing and what that change is going to impact the business. So basically the ownership is with everybody. So this revenue loss could be seen as only a short-term impact, but the long-term gains that it's going to bring to our talent is humongous in my view. So that's exactly why you see companies calling out that we are experiencing more and more smaller deals, right? And why that is possible is because companies are able to deliver these smaller deals in much less time. Your time to market, time to production is shortened because you are delivering through DevOps and Agile methodologies. So you're not wasting time which is spent otherwise designing transport. How should my transport mechanism? How should be my change control access board and so on, right? So that's why companies who deliver the work to end customer in DevOps and Agile methodology, they do so through smaller teams, and that's why more and more number of smaller deals are announced. So you have to see this thing also as well. So the analysts who are always fixated on knowing large deal pipelines. ये हमेशा question होता है call में. What is your large deal pipeline look like?
Always.
Right? So you have to see it that way, that large deal is now getting sliced and diced into many small deals. होता क्या है इस वजह से? Customer gets to test the water with the company. They get to assess the quality. If the quality is good, they keep on giving the repeat business. So what this is bringing in is more financial, how should I say? I don't know exact financial terms, but it improves the cash flow for the companies. How? Because you set up a benchmark-based payment system. So initially, आपका एक level of एक sprint हो गया, आप sprint accept हुआ, sprint दूसरे sprint में आया. You can always tie certain percentage of payment to certain phase in your DevOps or Agile methodology. So that helps companies claim small ticket revenue continuously. So if you see the revenue which is going to come to you when your code get into quality or your code get into production, usually that's when you realize certain revenues, right? That used to be the traditional model. But with these Agile and DevOps methodologies, the smaller deals will actually accrue to a large windfall gains for companies, because what will happen is even more and more smaller companies who don't have large budgets will be able to take up projects and award contracts to such companies. So that means it's a secular growth happening in the entire sector. So large deals should not be the focus area for you. If a company is announcing that we are able to execute large number of small deals, then that's a phenomenal transition in my view.
Yeah. So on using Devops, so time to market improves by a lot, leading to a much better customer experience. The cash flow conversion improves a lot for the companies, and even the market is expanding at a much rapid pace as more and more small companies enter, and they can even go for these large IT major companies to get their operations done. So before we go deeper, could you please explain what do you mean by DevOps and agility, the agility, increased agility that you talked about for everyone's benefit, please?
Yeah. So basically, DevOps is a combined term that means development and operations put together. So earlier, what used to happen, there used to be a development team, then there used to be a testing team, there used to be a quality team, and everybody had a gate criteria. Developers would do, let's say, only unit testing, and then they would do, let's say, integration testing with the testing team. And finally, the system testing would happen with the quality guys in. So that was always how the project was delivered. So you had to plan for. So the typical phase of the project was you will get into a workshop, then you do a business blueprinting, and then you would create a design document, then you would start your build. Once your build is finished, that is when you get into a testing. And you discover what are the pitfalls, what are the incorrect implementations only when you are in the testing phase. So that means you raise bugs, you raise problems, and then development teams again goes. Most of the time they contest that no ऐसे ही बोला गया था and हम लोगों को पहले बताया नहीं गया था. So this is a very common feedback that developers give to the testers, that see the design document is like that. So what DevOps does is it removes the boundaries from these teams and they put everybody work together. So testing team का responsibility build खत्म होने के बाद नहीं आता है. They have to ensure that they build smaller components and they keep on getting feedback from the operations team, whether it is meeting the quality criteria, whether it is meeting the functional criteria, whether it is meeting the customer expectation or not. So essentially what happens is your development and operations go hand in hand. And that is why your time to market or time to production is cut down significantly. So what it means is it's a culture. It's, of course, there are certain tools and continuous integration and continuous deployment pipelines also. थोड़ा सा technical हो जाएगा, but from a very layman and a business perspective, what you do is you no longer run your project in a sequential manner, but you run your project in a parallel manner, where developers keep on getting feedback from operations guys and operations guys keep on seeing what they are going to get. So they know if things are going wrong. So what it results into is it would mean that customers get a working software quickly. See, the thing is, what happens is when do you get waste? So what happens is your customer will realize value when they have a product or a code in productive live environment. When will they have a product in live environment? When somebody builds it. When they will build it, when you have a team who is working on it. So the time to market was sequential and it was very elongated. So instead of waiting the quality assessment and building everything together and then shipping it to customer, what happens is you will start delivering small features to the customer. Deliver something to the customer, engage your customer, right? If you say your customer that I will deliver your product after 6 months, for 6 months you're not engaging your customer at all. But you say to your customer that I will deliver this one feature in first month because this is a critical to your business, for example, right? So you start using this function and you start giving us the feedback. So based on that, I also know that how I have to change a design of the next component or a next feature that I'm going to ship. So I continuously get the feedback from the customer, from the operations team, and that basically means is I am keeping my customer engaged continuously throughout the project lifecycle. And that basically helps in realizing your revenue. So when you deliver, let's say feature number 1, you get paid 5%. When you deliver feature number 2, you get paid 5%, and so on and so forth. In traditional ways, you would deliver the MVC, that's what people used to call it, right? Abhi bhi bolte hain, minimum viable product. But what happens, and I'm telling you from my experience, is minimum viable product never remains minimum viable product. it expands so much after a time that it is as good as the end product. And when such things starts happening, your developers complain, your project managers complain, your company complains, and that basically impacts your revenue, your positioning, your perception, everything impacts, right? So that's why engaging your customer from early on is extremely important. And that's basically what Devops and Agile delivery is all about. It basically makes everybody stake owner. It makes everybody owner of what is being currently built. It's not responsibility of developer or a tester or an operations guy. It's a responsibility of everybody. We deliver small features and we will deliver it continuously so that you don't even understand that we have delivered something.
So you integrate yourself more and more with your customer. You become a lot more bigger part of your customer. The
Yes, exactly.
Negotiating power also increases, I guess, to some extent.
Yeah, because customer suddenly start receiving something productive that keeps them engaged with you, and then that makes them want to work more with you. That's the change DevOps brings.
Makes sense. So even in our business, the more we interact with our investors, the better service we are able to provide them, and the more they like us. So DevOps means development and operations go hand in hand. It's a culture where companies create positive feedback loops to improve the products and services that they provide to their customer. So just by that logic, few companies will do it much better than the others, as we see in consulting businesses and other businesses where they have a very strong connection with their customers, and few players continue to gain a lot more market share. So guys, do check which companies are able to execute a lot of small projects under timelines in the next con call. So given what most IT services companies talk about, they always just talk about the developed markets. How is US doing? How is UK doing? So could you please share your thoughts if you see the same potential cropping up from even the emerging markets like India, Brazil, China, as our businesses scale and reach the heights of the developed market players? So thereby giving the industry a much longer runway, even after the developed markets are saturated.
I couldn't hear your question, Anish. Can you please repeat it?
Yes. So given what most IT services companies just talk about the developed markets, they talk about what is happening in US, what is happening in UK, how are the BFSI markets doing in Japan. So could you please share some of your thoughts if you see the same potential cropping up from even the emerging markets like India, Brazil, China, as our businesses scale and reach the heights of the developed market players, thereby giving the industry a much longer runway for growth, even after the developed markets are saturated, which I don't think they will in a foreseeable future, but just for conversation purposes.
Yeah, well, I agree to that point. I think our domestic market will have tremendous impact in the revenue contribution in coming days, I believe, because with the uptick in the manufacturing space, especially. But I'll come to that point later. But China, I think TCS already has very strong operations in China, so they are actually positioned very, very well. But if you look at other companies like LTI and so on, they don't have any strong presence in China as such. But TCS is the one who is present almost everywhere. It's like omnipresent IT company everywhere. And talking about the Latin American countries, or let's say the Brazil market, back in 2013, a lot of companies tried to look at this Latin American market strategically, right? Especially Brazil, since economy was galloping and companies opened offices and made acquisitions, etc. back then. But most of the investment was on the BPO or a basic outsourcing level back then. If you look at, Infosys, TCS, Wipro, all had workforces there, all opened offices there. They acquired some local companies, but it was mainly to service the US and the European market. That's because of the need of the nearshoring. Basically, nearshoring is one in which you service a client for 12 hours minimum from a same time zone, right? So this was the main reason IT companies invested in those markets, to service also the European markets. And since many Latin American countries speak Spanish, supporting certain segments, certain countries of the European market was relatively very easy because they could speak the native language very fluently. And the problem with Latin American market is no matter how hard you try, You have to acquire a local company to match a customer experience and a pricing level there. That's what my experience is, or at least from what I understand from speaking with some people. So, for example, if you look at Root Mobile, it's a product company. They acquired a local player in email marketing segment and positioned it themselves in that market. So, had they tried to penetrate that market by themselves, it would have been very difficult for them to do. From these markets for our IT companies to actually focus on a strategic investment there. The spend is mainly coming from US and European market, and then of course the Middle Eastern markets. So far, at least that's how we are positioned. If you take Mustech, for example, it's able to strategically work with the UK government. It's positioned very well in the UK. But looking at the developing markets, I think that's Latin American markets, that's going to be a little bit of difficult task. But as the uptick in the manufacturing segment starts in Indian markets, a lot of these manufacturing companies would come and invest in renovating their technology stacks. Because they really don't want to halt the production if at all unseen events happen. Because people have now realized that disaster management and the business continuity matters more than just a training that you would do, right? I remember I used to do disaster management and business continuity trainings in some of the IT companies, but uska kabhi zarurat nahi pada until COVID hit us. So ability to continue regardless what hits you is very important, or at least ability to continue your research without going to factories. That's where the digital twin and so on. So these kind of activities or these kind of investments would mean that more and more spend starts coming from the Indian manufacturing segment. So always connected factories, or you can actually simulate your assembly line or your research lab, or even you have to train the new joiners. And when you have to train the new joiners, you have to put them through the entire assembly line or whatever tools that the particular manufacturing company uses. So if you create a digital replica of that platform, you don't really have to put your employees through factory all the time. Through the digital twin of that factory, you can do all the things virtually through VR kind of an experience. And companies may not immediately start investing into those segments, but that investments will surely come in ER&D and some of the IT space. So I'm very upbeat about investments coming from our own domestic manufacturers in this segment.
Yes. So basically, companies in the developing economies are still at the lower end of spends, and hopefully they will increase it with time as they scale up further. However, ER&D is something which holds a lot of potential with all these PLI and China Plus One initiatives helping our manufacturing economy reach the next level. And they would have to go the automation way, they would have to go the IoT way. So the demand at this point in time is the highest in the last 10, 12 years as per the industry leaders, whether be it IT industry, whether be it ER&D. So how much of this is sustainable according to the trends you see? Because this is the biggest question that we get all the time. Yeah, I ask this as we have observed the cyclicality in digital spending in the last cycle of 2015 to 17, where the spending by the end customers had taken a hit compared to the historical averages. At this point in time, we are much higher than the historical averages. So just on the cyclicality of it, additionally, the margins are at an all-time high due to the supply-demand mismatch we see that primarily benefits our IT companies. So effectively, what I want to understand is till when will the party go on? So till when will the party go on? So simple.
Right. So one thing is very clear: the rising inflation and the rising interest rate definitely affects the spend specifically in case of IT. That has been the historical trend. So I'm not ignoring that fact at all. So that definitely impacts. But when you say effectively till when the party will go on, it really depends on what time frame you're referring to when you say whether it's sustainable or not. If you ask me whether these margins of 30%, 25% in some cases are sustainable over 5 to 8 years, then I would say margins would stabilize near somewhere 18 to 20% for most. But that does not mean you get bearish immediately. Right? So the nearshoring or offshoring or utilization is basically driving the margin up, but supply side challenges are offsetting those gains. As for the spends, from what I understand or what I'm seeing is there is no spend crunch yet. And 2015-17 is not really a true representation of a digital spend. Nobody had actually made any plans to invest very aggressively in going digital back then. It was only starting that people had starting discussing about the digital trend and digital transformation and so on. It was very new term back then. It's the COVID which basically introduced people to a completely new way of, surviving, completely new way of doing business. So that's why 2015 and 17, we cannot take that as a representation of a digital spend. And I'm not seeing any spend crunch yet. Companies have a lot of budgets allocated over the next 3 to 5 years that I can vouch for. But the digital growth is in the exponential phase right now, as we all know, right? So the contract which are awarded will be in implementation of the delivery phase for a while. And then we would get a stable phase where demand is consistent. It's not rising exponentially the way it is rising right now, but it would be very consistent. And then it would dip. But then it opens up new pockets in the entire value chain. For example, cloud, if we are talking about cloud, it's not new theme. It has been around since 15 years. It's just market took 15 years to reach a level where it would adopt and appreciate what clouds bring on the table. And also it gave cloud an opportunity to mature the offerings, right? I still remember I made a presentation back in 2010 to a Swiss company to use certain offerings from the cloud, and to which the customer said we don't have control over our code or our data, and we don't want to risk it. We want our data very close to us. So it took a long time for the general market understanding to mature. And likewise, there are similar pockets in project delivery and operations that we just talked about, which will mature over the time. So there are many companies who are still not doing that kind of a delivery as of yet. There are very few companies doing that. So companies will get leaner teams, but we become more productive. So if you ask from investment perspective, I think much of the growth anticipated in cloud or digital will start factoring in over next 3 to 4 quarters. That's my view. It does not mean the growth will stop. The digital transformation is a very long journey, as we discussed. So you just need to be invested in a company who would continuously anticipate the pockets of new growth and keep repositioning in advance. Right? So companies have to ensure that they are able to deliver the, let's say, whole gamut of solutions once the customer comes to them from one. So some companies operate only one or the more layers of the operation, right, of the entire technology stack. But I think Indian companies can scale up and they start offering the full stack offering from A to Z. Then that would mean that more value pockets would start unlocking for our Indian IT companies.
Yeah, makes sense. So as we were even reading in some article that normally digital transformation deals usually happen for 7 to 10 years, sort of a long deal, and you have to go from A to Z. So if an IT company can provide the services from A to B to C to C to D, and then till Z, then they could have a very strong connection with the customer and thus very strong cash flows. So I mean, like on the same topic, we have been following all your posts, threads, and spaces. So one thing that stands out is when would you go forward with booking profits in an IT company? And your answer was when you start seeing that the IT companies are not able to get more contracts, or there is some softness in the order book, or even the pricing takes a hit. So you would go forward with booking profits at that point in time. So that will be something that we will also look forward to. As per our experience, the first time the market gets a hint of a slowdown for many of these IT majors, it could bring some shake-up at least, given the high earning multiples that they currently trade at. However, corollary is also true when they continue to command, when they can easily continue to command these multiples if they continue to deliver the current growth, which we see for the foreseeable future. And Amaya also reiterated. Now, still, some of the companies will be, and even today, are big opportunities to add, given what they could become in the next 10 years. So, Amaya, could you discuss any from your list, and why do you think that they hold the potential to enter the next league? Like ER&D seems to be coming back, and the opportunity size for Indian companies is still like huge, like 100x of what the largest players are there in India. So please let us know your thoughts about the long-term trends and which other companies you are looking forward to. Yeah, I need to add Amaya again. Yeah, Amaya, I have added you as a speaker.
Just want to reiterate one point that we are actually trading at very high multiple at this moment. So if I'm talking about all these names, that does not mean that I'm recommending to buy these names at this price, but it's just that I hold them from very low level and my conviction could be very different, right? So, and that's where the importance of having a right network and right reach is very important. So whenever you speak people who are actively engaged in customer contracting or customer engagements, and you speak with them and you hear them say that okay, the demand is tremendous and we are just parking the contracts for next quarter, you continue to stay invested. The moment you hear them say that we are no longer passing any contracts or we are no longer parking any contracts for next quarter, that's a clear indication that the much anticipated moderation in the contract is going to be there, and it will be a while until market discovers that. So it's very important that you have ear close to the ground and keep on speaking with the right people who are actively involved in the customer engagement, and that's why your network really matters a lot. Coming to your point, I think I really hate to take names because it might be construed as a recommendation, but I'm
Amaya, we are not able to hear you. Could you please go out and come again? Yeah, Maya, we can also talk about the trends that you see and how the companies that you own by not just taking the names, just that how these companies are particularly winning in some way or the other and riding the trend that you see.
Yeah, can you hear me?
Yes, Maya.
Okay. Yeah. So coming to your question, I think the tier two companies, especially the likes of LTI, Mindtree, Persistent, or Coforge, they all have super potential to make it in a big league. That's since the LTI was 10,000 crore market cap company, I was very vocal that it would eventually reach a 1.5 lakh crore market cap company one day, and it's very near to that range now. So you have to see how things are changing, right? So back in 2006, we heard the management say that they will achieve $1 billion in revenue. But in 2001, they are now saying we'll achieve a $1 billion run rate only from a cloud business alone. And if this demand trend continues with that caveat, I won't be surprised if they report a quarterly $1 billion run rate by Q3 or Q4 or FY22. And all these tier two companies will experience superb traction. But to reach the scale, you must be able to check the maximum boxes as we discussed earlier, right? If you take Persistent, for example, they don't have any significant presence in the entire software segment. Or even if they have, it's very, very minuscule. So it means they won't be able to bid for large value creative contracts in this space. So that's an off. Coforge is very good. It's doing very good in the US markets, but it is owned by a kind of a private equity company who would not think twice to exit whenever the slightest of slowdown hints are there. So that there is a lack of skin in the game from the promoter side. That's what at least my primary understanding of the company is, right? And ER&D, if you talk about, has indeed it has come back. And if you look at the results from Tata, ELXSI or LTTS, that's clearly seen, right? I don't understand why people call LTTS result was a miss. It wasn't. So one has to note that ELXSI clocks higher margin because of very specific reason. They have a very strong presence in OTT and media where margins are expanding very sharply. You can listen management say the same thing again and again in all the con calls. And LTTS does not have any strong presence in. I mean, they have the Tata ELXSI's margin are expanding for a very specific reason, and I already described that. So it's not that LTTS doesn't have presence in the domain, but it's not as strong as LTTS, right? So, but that does not mean that LTTS is on back foot. So people are focused on what they see today. But if you see, ELXSI has also gone through series of underperformance and capital misallocation in the past. And ELXSI actually was established a long ago before LTTS did. So it gives them a long runway to know what works from them. So naturally, they have developed an edge in the certain segments. But if you see the IDP verticals, that has degrown even recently. So this is the same segment that impacted Tata Elxsi previously. So in my view, once our domestic manufacturing cycle again starts seeing uptake, and like everybody's upbeat about manufacturing, a lot of investments will come to our domestic ER&D players. And because of parent heritage, LTTS has an edge. And also, if you see at Tata Elxsi, their largest customer is still JLR. And if you also see the Wipro's ER&D revenues are also growing. The revenues grew in the ER&D segment 26% year on year. HCL and Infosys also taking big strides in the ER&D space. And Cognizant also recently acquired certain companies there, which are primarily in the ER&D. So I think the good amount of spend in the ER&D would come in next 3 to 5 years. That's for sure. That's at least what I can see right now.
Even when we talk about the ER&D sector, do you think that India is placed at a very sweet spot due to having engineers at a much lower cost and also having the capabilities to do the engineering activities that the customer require?
I have a little different take on it. The answer is both yes and no. Of course, we have large number of engineers which are coming out from our, from all premier institutes like IITs and all. But the problem is, at least until now, before the ER&D actually started emerging as a major segment in the market or in the sector, most of the people, they always used to take the jobs in the IT space because it was always IT jobs are always high paying compared to the ER&D jobs, and that's very well known. Another problem is the major risk in the ER&D is the skill, and what it means is, let's say if you are running a project in ER&D, and even a couple of people who are very critical to that team, if they leave, your project gets immediately impacted because replacing that skill and that talent is not as easy as you would replace an IT consultant in a software development project. So that's why ER&D companies are, in my view, much more dependent on hiring of and maintaining of the right skills. Of course, India is in sweet spot, definitely, but we also have to see the uptick in more engineers joining the core industry in hardcore engineering. When I graduated, I wanted to work in the chip design because of my engineering background. I love chip design, but it was really unfortunate. The jobs offered were so few. And I still remember the first job I got was on an assembly line, and the salary was 3,400. So you have to appreciate your engineering talent, and you have to ensure that you skill them, you keep them, and you scale them up on a global level. If you look at EPAM, who is kind of an ER&D giant based out of US, if you look at Altran, for example, the quality of engineers is phenomenal. Our engineers also have superb quality. The only problem is, very few people actually join the embedded design, VLSI, chip design, these kind of segments, because time to make good money from this segment for an individual is relatively longer than an IT industry. But that's a sad state. But yeah, hiring and right skill is both an advantage as well as a risk for an ER&D company.
So basically, it's very tough to attract great engineers if you are an ER&D company because you won't be able to pay that much money. So just
they have to start paying. Industry has to start paying. That's what the point is.
They have to. And even if we compare it with other global majors, they might be paying 4x or 5x higher salaries to their engineers. So
absolutely,
I think the industry has to take a bit hit on their P&L and somehow pass this cost on, because I think that the problems that they are facing at this point in time, that attrition rates that they are facing, and as you reiterated, the importance of an engineer when you're working on a project, you can't really easily replace that person. So I think slowly and steadily they will get to start paying a lot higher salary than what they are currently, and I think it's good for the engineers of our country. Over the long term, yes, hopefully this trend picks up, and Yes, great. So just to reiterate for everyone, the stock names mentioned should not be construed as investment advice. The question was just to understand the thought process behind finding excellent companies in the IT sector. So just a final question from my end. I mean, you have mentioned this multiple times as to how you look at tech, not just in the IT companies, but in all other companies that you have invested in, whether be it DMart or Bajaj Finance, no, not an investment advice. So given the best of the best tech monopolies and even the emerging SaaS players are getting thrashed in the US market, like as we speak, like they are down 50-70%. Some of the larger players are down 30-40%. So do you plan to move some part of your investments there? Which are the ones do you follow very closely to buy someday?
Actually, I'm invested in a company called Avalara since 2018. They offer a tax and a compliance API to the world of e-commerce, and since they work very closely with Amazon for all the Amazon markets, so basically it means every invoice Amazon generates consumes the Avalara API for tax and compliance purposes. So this was my thesis to buy Avalara back then, and I still hold that in my US portfolio. I would actually love to buy Amazon, to be very honest, but it's too expensive for my level. I would definitely buy EPAM and Shopify if we see these companies also getting thrashed the way Facebook got thrashed. But I don't know whether these companies will experience any kind of such impact or not. But yeah, these are some of the names I would definitely love to own. But since I understand Indian political cultural aspects a little better, I understand how Indians work, how Indian companies think. I better still invest in Indian markets. One thing I really want to reiterate here is India started as an IT outsourcing hub, right? It grew in size, made lives of many. It remains predominantly a service provider, and people still call it. It still is, but it is it's transforming too. You have to see that Indian IT is no longer a pure services provider. And IT companies usually what happens is they are productizing the IT services. That's the change that's happening. They are no longer providing the IT services, but they are productizing the IT services. And whoever is doing that will continue to deliver you more and more value in the future. That's for sure. So I think that's my view. I would not get into which company offers what products. I have already covered that it's multiple number of times, so I will not waste more time on that. But yeah, in US markets, I hold Avalara just because I see it as an Amazon proxy. I would love to own Amazon, EPAM, and Shopify if I get any meaningful dip there.
Yeah, totally. Like Avalara, Amazon, Shopify, like these are the companies which the investors I know, the good investors I know in US are always talking about. Like I have a few friends who invest in US and they are always talking about these companies. So I understand. So, as you mentioned, like we investors need to get over our biases and need to see our IT companies what they are currently and not what they have been and where they are going. And the potential that you see and you put it in words is like amazing. Like we are able to understand each and every part of it, and we understand the potential that you are talking about. And now, from now on, we will invest a lot more of our mental capabilities in understanding how this IT sector works and which are the few companies who are like really in the cusp of having that hockey stick growth that you're talking about, which I think L&T Infotech is currently seeing. So thank you for being so generous with your knowledge, Amaya. If it was a public event, we would all be giving a standing ovation, like which other speakers are already reiterating in our DMs. So guys, do follow Amaya at the rate Finster85 if you want to learn more incredible insights about the technology and retail sectors. He even recently did a webinar on SaaS companies, which is available in the Tamil Nadu Investors Association group. Totally worth your time if you are interested to learn about what drives the business models of SaaS companies and how to analyze them. So we can move to the Q&A section now, AK. Guys, please keep it to the point and in line with the topics that we have discussed till now. Thank you so much, Amaya, for your time.
So, guys, we'll open it up for Q&A now. If you want to ask a question, you can request yourself to be a speaker. And as Anish rightly mentioned, thanks a lot, Amaya, for 100 minutes of wisdom, and thanks to you, Anish, as well, for those deeply thought of questions. Yeah. So,
Let's see.
Bharat, your question, please. I have added you as speaker.
In this sector of IIoT, that is industrial IoT. So, Amaya, what do you think the market, where it is going in terms of the IIoT, and how this Western world is taking this after the COVID? Because as of my experience concerned, in my plant, I have taken few initiatives like robotics and all. But frankly, I mean, investments is not that worth kind of return and all. So, in manufacturing sector here in India, what I came to know or what I feel is it's not that kind of cusp to invest or go for the IoT. So your thought on IoT and maybe probably it can lead to LTTS or LXI in this world.
I will just add a few points to how to see this IoT space, and then I will go to IIoT and how IoT and IIoT are different from one another. So the thing is, usually I'll say that a typical IoT platform takes at least a couple of years before you start making any meaningful insights drawn out of that platform, right? So you have to calibrate your sensors a lot of time. You have to change the way you gather the data, the nature of the data that you gather, the way you structure it, for example, the kind of insights you want to draw from that data, what is the latency of that data. So what I mean is it takes a couple of years, not couple of years is actually at the lower end. It takes a while for an IoT platform to mature. Of course, with this new, technologies which are reducing the time to market significantly, that has come down now. But for an IoT platform, the time to market, when you actually company starts recognizing benefits out of that IoT or IIoT deployment, that's still pretty large. So what I mean is, when a company say that we do IoT implementation and so on and so forth, that is not immediately value accretive for the end customer. So unless you have the same platform implemented at different customers, you already know, how you want to implement it in order to ensure that the go-to time or the time to realize ROI for your end customer can be reduced. You have to take all these IoT offerings from all these different companies with a pinch of salt. In principle, IoT and IIoT are, in a way, they are same, right? They both connect devices to the internet, and it basically means they make your workplace or a factory or a unit. It makes it smarter, right? That's what you can call it. The difference is that IoT is basically is focused on more on a convenience kind of a level, where IoT works to increase the safety and efficiency of your production facilities. If I have to put it in a very black and white kind of a manner, that means the IoT solutions are usually deployed to consume, right? And IIoT solutions are usually the B2B businesses, right? In case of B2B requirements, right? So for the companies which have, let's say, multiple units which are spanned globally, or you have production facilities, right? So they can, benefit from implementing the IIoT solutions, not the IoT solutions exactly, because you need to connect all these units between one and each other, and so on, right? So if you have, let's say, a smart IoT system where sensors are deployed on, let's say, your commercial trucks, and you're assessing how long would it be for a truck to service, or when it would be that an oil change would be required. So that's an IoT solution. That's not an IIoT solution. But that's the difference between these two things. And the ROI realization on IIoT is really a little complex. I mean, it depends from company to company, because it primarily focuses on the efficiency within the company. It differs from company to company what an ROI means for each company. For IoT, ROI is very clear, right? So that's where it's a little different. IoT is much more on a consumer side. IIoT is much more on a business side. Coming to LTTS or whoever it is supporting on IoT and IIoT platforms or Industry 4.0. These are kind of one and the same terms under same umbrella. Can you repeat if that answers your question? Because I could hear only your question partially. I don't know whether that answers your question or not.
Yeah. So another part of the question was like how the can we say that the IIoT at this stage is same like we have seen SaaS in 2010 or like that only in the evaluation phase, and how the Western world or manufacturing industry in the Western world is taking shape in terms of this. So that's the two part. Thanks.
I think I would still club IIoT under IoT itself, and I would say that the transitioning is happening here in a specific manner. So, for example, if you take example of an IT company or an ER&D company who has a specific IoT platform, okay, that basically is, for example, deployed on remote location gas pipelines, and they want to monitor the state of a pipeline, state of joints, and whether there is a leak and what would be the service lead time and so on. These kind of metrics they want to basically assess. So there are industry-wide KPIs that usually everybody wants to track. So they bring a product, which basically is kind of a platform, which platform means they have a software, they have a hardware, they have an analytics, they have sensors, they have sensors manufacturing, or they're at least outsourcing the sensors from some vendors. Basically, when you go to them, they provide you the entire platform from start to end. So these kind of ready-made platforms, eventually companies will start building for some of the use cases in the industries. And then these platforms can further be customized to monitor additional KPIs or additional metrics that are specific to that particular business. So I think we can't and we shouldn't see IIoT or Industry 4.0 very differently from IoT. As more and more factories come, see, the most important thing in IoT is the recency of data. That means what is the latency factor? If you have a lot of lag between the time when your sensor records and sensor data and when you actually receive it and then model it and draw insights from it, I'm talking about this latency. I'm not talking about specific latency in the network, in the communications layer. Not exactly on that, but the entire latency on the IoT platform. So your latency has to be as low as possible, and that will happen only when your communication network is phenomenal. You see, I'm facing trouble in communicating and connecting with Twitter Spaces right now. So you can actually imagine the investments for IoT to thrive has to come first on the communication platform. Communication has to be absolutely reliable, near real time. When that happens, that is when your IoT solutions will thrive, because to make more meaningful insights, if you actually take a self-driven cars, right? So when you say smart car or self-driven car, you can't have a paradigm in which only handful of cars or only certain percentage of cars are smart. You need to have entire fleet of cars. Every single car which is running on that road has to know what is happening all around me. If that's not happening, then it's bringing a lot of noise in the system, right? And that will happen only when communication as a layer matures to that level where it is able to communicate, accommodate all the devices that are coming online. So I think you can keep a track on a communications as a segment. If communications as a segment is maturing, that will give a lot of push to IoT as a segment.
Sure. Piyush, your question, please. You're a speaker now.
Yeah, thank you so much, Anish and Ashish, for having the question. So, Amya, I think thank you so much for presenting this space very well. My basic question is with respect to the comparison with respect to the mid-cap IT space and the large-cap IT space. When we look at the capability front, I have also been part of this IT industry since last 8-10 years. So my basic understanding is that when we look at the capability which, let's say, the large cap IT space companies like TCS, Infosys are holding with respect to their large COE teams or their investment into the products, and when we do this comparison against the mid cap IT space, which are more they're hiring the employee, putting up on the directly on the projects, and not having that much large investment into the generating the new capabilities, which are, let's say, the future capabilities which we called out. And this is my first question. And second is, as most of, so since like there is a demand in last 1 or 2 years and there is so much hiring is happening, so as we see that hiring is happening, so the mid-cap IT companies mostly, at least so far I have seen it, like the Mindtree or maybe some up to certain extent LTI or few others named like ITC Infotech. So these companies usually go and do the hiring directly, put the objects where they have to, they just putting up their margins and placing it directly on the customer. So that is ultimately not bringing the capability inbuilt into the company. It is just a kind of a trading business kind of thing. They're just hiring and placing it on the business. So how long this would be sustainable, or this will help them to gain the margin, because right now there is a demand. So that's where they're able to, let's say, charge up to a certain extent. But as this ease out, how sustainable they would be able to do this against the valuations which currently the mid-cap IT space, let's say some companies which we talk about would be trading at 50 or 60 PE against their average multiple of 25 or the 30 PE. So how do you see this particular segment?
Yeah, you need to give us a minute, Piyush. Ameya had to go out because of some technical issues. Yeah, I think he's back. Yeah. Give me a minute. Yes, Ameya, we can hear you.
Yeah, we can hear you.
It's about how do I see the mid cap and the large caps and the PE multiples. If you can just repeat your question once for clarity.
Yeah, so I think first question was on the capability which, let's say, large cap IT and the mid cap IT space with respect to their investment into the future technologies or the products like COEs, labs, which they hold in. And the second question was on the hiring of the employee model. So like some of the mid cap IT space companies are usually just hire the employee and put it directly on the project, where they don't have their own capabilities, just hiring it and putting on the project with a certain margin. So how do you see this sustainable? And then last one is on the valuation. So against their average valuation of 30 PE, something like that, now they are currently trading, let's say 50, 60 PE. So let's say if the earning also doubles in the next 3-4 years, but there is no longevity of the earning growth of 15-20% down the line. So could that be the against reverse to their mean of 30 PE, and then there is no re-rating optionality available against the current valuation of the mid-cap IT space?
Right. So to be honest, I'm not a valuations expert, so I can comment only limited on this aspect. But I fully agree with you that these companies, mid-cap companies, are currently trading at relatively higher PE compared to the large caps, and that's the structure of the sector. And that has always been the case. But I think we would continue to see at least 15% growth in the earnings, regardless of how the market situation is, at least for next 2 to 3 years. At least that's what I see from my own experience and my own interaction with multiple companies and the kind of demand we currently have. So at least that visibility we have, and almost all the companies also, they also have the visibility for 14 to 18%, 14 to 15% growth is very realistic. I'm not saying that's not possible. Coming to capabilities, I'll say TCS is really role model in that.
Yes, Ameya, we are not able to hear you. Could you please do the needful? Yeah. Guys, just a minute. Yep, Ameya, you're back.
Yes. Yeah, sorry. So I was saying when it comes to capabilities, TCS is really a role model. I mean, the pace with which and the base on which it is able to innovate and launch new cutting edge products, it's simply phenomenal. I mean, I would, if you ask me, I would like to look at TCS or an Infosys, I would always go with TCS because they are innovating at a rapid pace, at a humongous pace. If you look at their quads solution, for example, and recently government also announced, right, they want to launch a digital rupee. So in our listed companies and listed peers, there are only handful of companies who have a genuine capability to do that, and and the leader in that space is TCS. So Quads already has a capability to tokenize everything. It could be your stock units tokenization, or let's say launching a digital currency on top of that. So the way TCS brings new and new capabilities on the block is simply phenomenal. So when it comes to the large cap and the capabilities, I would not rate anybody higher than TCS. So on the large cap, my buck is on TCS, that's for sure. And when it comes to mid cap, it's LTI. LTI has also invested a lot in the blockchain and the payments solution way before actually this all crypto mania started. They have a tie-up with a Nordics-based bank where they already have a very active production use blockchain solutions for the payments. So these are kind of, my benchmark companies, and I always look up to them, what they are doing in this space. So capability wise, I think these two companies are doing really good. And on valuation, I think we would have more expert people on this on this space who can comment on that. But I think 15% growth is very realistic, at least for next couple of years.
Yeah, I think I got the point. Maybe Anish can comment on the valuation front. So Anish, my point was, let's say when Ameya was talking about the 15-20% growth. So let's say if we are talking about the next 4-5 years, the earnings could double. But let's say if there is no further growth visibility of the similar pace after, let's say, 5 years, so then there is a possibility of valuation re-rating, and they could reverse it to their mean average, which is, let's say, the 25-30 P, which they used to trade some time back. So maybe if you can comment something on this.
So, hi Piyush, I think we already discussed this in our space in the earlier time, and you will get the recording and you will be able to understand what we mean. But just to reiterate, when these companies continue to deliver the growth rates that they are delivering at this point in time, 15, 20, 25% growth rates, how many companies do you find in India that can deliver such growth rates? And that to the scales at which they are doing, for example, TCS, for example, Infosys, for example, LTTS, for example, L&T Infotech. So you just have to see it in that level, and unless we see the softness in demand that Ameya was also talking about previously, the softness in demand as to the growth rates go down, we don't see that there will be a derating. That's how it has played. For example, see what is happening in specialty chemicals. They might be overvalued, they might be at aggressive valuations, but unless they continue to deliver the growth rates that they are delivering at this point in time, we don't see that derating will happen, because in India, the growth is very rare. We don't find many companies growing at 20% for 10 years, for 15 years, for 5 years also. So for that, the scarcity premium will always be there, but you need to look out for any growth derating, that the lesser growth rate that they can project. If they give a lower growth projection than what they are currently giving, then there could be a derating for some time. But if you are in it for the long run, and as Ameya has already reiterated, I think 1,000 times in this space, the opportunity size and the speed, the growth rate with which the whole market is expanding is huge. And if you can take a bit of price correction and time correction, I think it is okay. It is okay to stay on with these companies. Okay, we can move on to the next question.
Thank you so much.
Yeah.
Thanks, Piyush. Shubham, you're a speaker now. Your question, please.
Okay, can we add like few speakers at a single time?
So the thing is, I see 11 requests to speak, but I can just see one speaker request in the window. Yeah, Shubham is here.
Shubham
Okay.
is there. Hello. Am I audible?
Yes, Shubham, you are. Yeah.
Yes. Hello.
Yes, Shubham, we can hear you.
Yeah, let me
Hello.
add.
I think he has a technical issue as well.
Yes. Okay. No,
Anish, can you see requests by people to be a speaker?
yeah, I'm doing it.
Okay, please add them. Yeah, thanks.
Yeah, give me a second. Yeah, systematic quants, I have added you as a speaker. Please go forward with your question.
Thanks.
Yeah.
Since it is, will the IT rally continue? I would like to add to it. I won't be taking much of the time. Yes, the IT rally will continue because India's main strength actually is IT. If you have to play India in the next 2-3 years or 5 years, then you have to be
Yeah, Amit, you can go forward with your question, please.
Okay, cool. Can you hear me?
Yes, please.
Okay. So what I have a question is, right, we say that IT rally continue. I think most of us are aligned that since it has happened, I think 1 or 2 times in the past, it will do. But what I wanted to understand was how soon is the recurring event of IT rally going to continue in the future? Is there any analysis that we can put forward?
Yeah, I'm adding more.
I couldn't understand his question. Maybe you can rephrase what exactly you mean. I mean, whether another re-rating could happen, is that what you're asking?
Yeah.
So, to be really honest, I don't think so. This kind of re-rating we can again expect. It's, the existing re-rating happened because of a very specific reason and the sudden need to go digital and sudden need to go virtual, right? So, to be really honest, I don't have a visibility for another re-rating. There are certain pockets in which additional value would unlock. For example, if you see there are certain companies who are doing some very active work building next generation IoT platforms in the renewable sector, because you see renewable sector is also one of the sectors where everybody is very upbeat about, and the investments are coming left, right, center into this sector, right? So there are certain mid-cap companies who are preparing for it since quite a long time, and they have platforms for renewable IoT and the carbon decommissioning platform, something similar to that. I am not an expert into this segment, so I have a very limited understanding on the renewables as a sector. But there are certain companies who are doing these kind of works. So these companies will continue to see at least the margin and the earning sustenance. That's what my genuine view is. But another re-rating of this sort, I don't see that happening, to be honest, very soon.
Sure. Thanks, Amaya. I think, guys, that was the last question for the evening. I mean, we can appreciate the amount of time that Amaya has given us that on a Saturday evening. Anish, I'll hand it over to you and you can close it. Yeah.
So hands down, the best industry analysis that I have seen on the IT industry. The Indian investors will get the benefit for years to come. As we release the recording out there. So many deep insights. Our whole team will have to listen to this spaces again to absorb more and more every time, Amaya. So thank you so much for your time, and thank you so much for the hard work that you do to post your insights in Twitter. And we look forward to more of your content going forward. Thank you so much.
Thank you so much, Anish and Team JST, for having me. And I again apologize for a poor experience. And just because of this time lost, we could have taken even more questions, but I'm sorry for that. Can't help.
It's totally not your problem. It's that it's Twitter Spaces, and we will totally write a good email to them about it. We look forward to it.
Maybe JST can launch your own app through which we can all connect.
Hopefully we will do someday. Thank you so much, Amaya. We look forward to more interactions with you as and when more and more things happen in the IT sector, which I think it's never going to end. The evolution that's going on in this sector will continue to just go on its exponential path. So yeah, looking forward to more and reading, obviously. So Amaya's newsletter, each and every week you can, he writes on a monthly basis. So you can go and subscribe to his newsletter. It's one of the best technology, in a very simplified way. You will get all the latest things that are happening in the technological sector and his thoughts on the same. So do subscribe to that and go follow Amaya on Twitter @Finster85. And we look forward to more such interactions, Amaya, going forward. Thank you so much.
Thank you so much, Anish, for having me. Thank you.